Did you know that according to Cathie Wood, Tesla stock is a buy right now? Amidst the dip, the star investor has been buying up Tesla shares. While others are becoming concerned with the EV stock's performance in the market, most experts and investors believe that it is actually the best time to buy Tesla shares. You surely would not want to miss this info. Technology has been one of the worst performing sectors in the stock market this year, which is in stark contrast to its monster gains during 2020 and 2021. Not even prolific tech investor Cathie Wood has escaped the carnage. Wood is the head of ARK Investment Management, and its flagship ARK Innovation ETF has lost 57% of its value this year. ARK is known for investing in innovative companies with long-term time horizons, and despite the ARK Innovation ETF suffering steep losses this year, it has still more than doubled since its inception in 2014. That highlights the importance of ignoring short-term market gyrations and focusing on the big picture. 3 of ARK's 7 ETFs currently own electric powerhouse Tesla, and those bets might be set to pay off big time. Tesla stock hit a 52-week low of $206.86 in May, and ARK thinks it could soar to $1,533.33 by 2026. The stock has already bounced to about $270, but that leaves plenty of upside potential for investors who buy now and take a long-term view. Giving justice to her moniker as a star investor, Wood's trading has certainly been timely, buying back shares when the stock dipped and selling some off after it rose higher. In fact, Wood bought another 66,190 Tesla shares around mid-October on top of the over 132,000 she bought earlier that month. ARK Invest's first purchase in October was made after Tesla reported a miss in deliveries in early October, when Tesla announced its delivery and production numbers through a press release, and once again after the stock fell following Tesla's Q3 report. In early November, Cathie Wood's ARK Invest loaded up on Tesla shares in its Innovation, Next Generation Internet, and Autonomous Technology and Robots ETFs. The company's 3 funds saw a buying opportunity in the automaker's recent slump on Wall Street. ARK's Innovation ETF bought 27,594 shares in the second week of November, while the Next Gen Internet and Autonomous Tech and Robots ETFs gained 2,909 shares and 9,173 shares respectively. Not only is Tesla the largest producer of electric vehicles in the world, but it's also the only profitable pure-play EV stock investors can buy in the US right now. Tesla's competitors are either existing car makers that are still carrying their legacy combustion engine vehicle business, or they're new up-and-coming EV hopefuls that haven't scaled production yet. Moreover, Tesla has developed some of the most advanced autonomous self-driving software, which could be the future, not just for personal vehicles but also for the mobility industry. The company has revealed plans to release a fleet of fully autonomous robotaxis in 2024, which won't require any human intervention. One estimate suggests autonomous vehicles will be a $2.1 trillion market opportunity by 2030. Beyond the car industry, Tesla continues to expand its presence in residential solar and battery storage. Demand is growing rapidly, and the company has utilized a new facility solely to produce these batteries to ensure adequate supply. According to Tesla's 2021 Impact Report, the company has deployed 4 gigawatts of solar systems since 2012, generating 25 terawatt-hours of clean energy. That's more energy than every Tesla vehicle and every Tesla production facility has consumed over that time frame combined. It's cementing Tesla's legacy as a true green energy company and not just a car maker. On the EV making front, Tesla produced just 3,100 electric vehicles in 2012, which has since rocketed to 930,422 in 2021, which resulted in $53.8 billion in revenue for the year. The company continues to ramp up production with the recent opening of its new gigafactories in Austin and Berlin, which aims to double its annual manufacturing capability to 2 million vehicles. Analysts are betting that once those facilities have ramped up, Tesla could generate $119 billion in annual revenue as soon as 2023. Electric vehicles will likely remain the heart of Tesla's business for years to come, especially as the company has outlined further expansion plans that include 10 to 12 new gigafactories with a total annual capacity of 20 million cars by 2030. ARK anticipates Tesla's robotaxi business will really take off once it launches, predicting it could make up 60% of the company's value by the target date. But electric vehicles will still account for the majority of its revenue, according to ARK's modeling. The $1,533.33 price target may sound ambitious, but it's worth remembering Tesla stock has gained more than 21,400% since it became a publicly traded company in 2010. Tesla is known for delivering high-flying returns to investors over the past few years, as it has grown to become the largest player in the industry. However, the stock faced several challenges in 2022, which resulted in shedding 52% of its value year-to-date. Some of that decline has strangely occurred in the past month. Despite the NASDAQ 100 Technology Index rising 6.25% over the past 30 days, Tesla stock has dropped roughly 14% during this period. Investors appear concerned about CEO Elon Musk's focus after his recent $44 billion acquisition of social media giant Twitter, which appears to be occupying much of his attention. Still, many believe that it shouldn't change Tesla's long-term trajectory, and many analysts on Wall Street remain incredibly bullish on the company. In fact, an analyst for ARK Investment Management thinks Tesla stock could soar nearly 930% by 2026. Tesla has produced 1.2 million cars over the past 4 quarters, bringing in $74.8 billion in total revenue. That offers some context for ARK's projections. For Tesla stock to soar more than 900% by 2026, ARK says the company will have to be selling 17 million cars annually with about $1 trillion in revenue. However, it is worth noting that the initial report by ARK does not account for Tesla's stock split since it predates its occurrence. That said, the possible 900% plus gain has been adjusted to reflect the split alongside ARK's initial price projection. Therefore, the company has 4 full years to make that happen until the end of 2026. But even so, that projection might be somewhat ambitious. Tesla CEO Elon Musk himself has hinted that Tesla's annual production capacity could hit 20 million vehicles, although not until 2030, as it will require another 10 to 12 gigafactories. And since none of them have been formally announced yet, it's unlikely the company will be so far ahead of schedule that 2026 becomes a likely possibility. That said, ARK also has a bear scenario at the lower end of its forecast. That would involve the EV maker selling 10 million vehicles by 2026, generating about $490 billion in revenue. In other words, it would mark a halfway point to Elon Musk's 2030 project, and the timing does make sense. If that scenario comes to fruition, ARK thinks Tesla could rise to $966 per share, representing more than a 400% upside. That's still a significant gain from here, and it's a far more likely scenario than the ultra-bullish case. Tesla stock has traditionally been met with volatility since the Musk Twitter saga began, and with the majority of his tweets now promoting new ideas for his newest venture, investors are skeptical. Musk has essentially tarnished the Tesla story stock, and it's potentially starting to impact the Tesla brand with this ongoing Twitter trainwreck disaster. Ives said. Perhaps some of the most piercing words of the note from Ives were that Musk has done what bears have unsuccessfully tried for years: crush Tesla stock by his own doing, what we view as a purely painful, dark situation. Still, Tesla's perma-bulls continue to attach themselves to the company's thesis. ARK remains bullish on Tesla. Wood believes that Tesla will go up 10x. In an email update to investors, Wood explained that Tesla could expand its addressable market tenfold by cutting the cost of an electric vehicle in half. According to Wood, there are a lot of innovations in the auto industry that put the traditional auto industry and consequently traditional automakers in harm's way. Wood pointed to Tesla's autonomous taxi platform as an example of such innovative change. Tesla has grown into the largest car company in the world and now sits atop the industry. If things continue to go Tesla's way, that's not likely to change anytime soon. The future certainly looks bright for Tesla. Tesla and the EV sector in general is entering a new phase, and the company is positioning itself to continue to lead the way forward. While returns over the coming years may not match prior results, Tesla has a lot of irons in the fire. It's worth looking closely at whether now is a good time to invest. Overall, Cathie Wood remains more bullish than ever on Tesla stock. Wood, who is a huge proponent of innovation, continuously shows her support for Tesla and its forthcoming innovative projects. Subscribe to this channel for more Tesla stock updates.